Peter McGuire, CEO of XM Australia. Peter, it's great to have you on this Sunday to reflect on last week, given that despite all of the realities that Christoph has outlined, equity markets reached record levels last week on more than one occasion. There was, I think, 2 or 3 days when one record after another was being hit out of the park. What's your reflection on that? And of course, the new Biden administration somewhere in the middle of all those records.
Well, good morning, Sean. Good morning, Christoph, and welcome to hello from Sydney, a sunny day. I think the first part is we're ringing the bell nearly every day. And if you look at Asia and you roll it across many different jurisdictions, you had big moves to the upside. So it was just that continuing, feel good, very much built on that Christmas rally, didn't go away. And that was very much materialized in last week's numbers. We had a little bit of pullback and a bit of softness on Friday afternoon, Sydney time, that is, across Asia. But still, the US is at, as you say, knocking the ball out of the park. As far as the Biden administration, I think it's too early to call. Building on also Christoph's remarks as far as inflation, Sean. Yeah, we've seen, those big numbers with oil, with the commodity cycle, base metals, everything is starting to charge. And that could also, I think, probably give a little bit more horsepower to the markets overall for some of those big mining firms, the oil movers, and everyone along that supply chain and the consumption curve. So there's the first part of it. I'm not suggesting that we're going to fall in a hole. Inflation's a problem, but that's what you get when you pump a market with trillions and trillions and trillions. You do eventually have to get some form of inflation. And I'm not sure when it'll really tick off and to be a pain in the proverbial, but at the moment, that's just part of the market, I'd say.
When you reflect on the start of this year, and obviously last week we saw records being hit in Asia as well as the US on equities, are these two markets, i.e. the Asian equities and the US equities, Europe, interconnected? Are they feeding off each other? I mean, typically the history has been Asia follows the Western markets, and I'm wondering, is that correlation still bedded in? Do you expect that to continue? What's your thoughts on that?
I think it's the tide lifted all boats, Sean. No matter what happened, where you were, everyone was pumped. The gas tank was being filled up with Super A, auto fuel, and that really pushed everything higher over the last 9 months. And no matter where you were, I saw even Venezuela had a big move to the upside Thursday and Friday. So everything has had a move to the upside over those preceding months. And where 21 goes, I want to look at US dollar. I'm interested as far as, the workings as far as the bond market, what happens to gold, and where, of course, the crude market takes us. If it edges higher, and we've done many discussions over the last few months, if it pushes higher to that 60 number by mid-Feb, then that really is going to turn on to more costs and the inflation spiral. So let's just see where the next few weeks take us. We've got the situation with China, of course, and New Year, so that will be that week off. And let's just I'm keeping both hands firmly on the wheel at the moment.
Peter, from an equities point of view, what is now more important, the stimulus, and from an investment decision, a buy or a sell, or is it the PE ratio of a stock? I mean, historically, stocks were judged upon their expense. Are they expensive? Is the PE 20? Is it 25? Is it 10? But now it seems I'm trying to get Arner. How important is that now versus the Fed signaling or the fiscal signaling another trillion or 2 trillion?
Well, I think the build on that, Sean, is what we experienced in 20. To think where we were in start of April and where we were December 31 was two certainly different places. And then building from that style and thinking through where January takes us, how much, hand on heart, truly, hand on heart, where is the NASDAQ going to be mid-year? And I look at it, people say, well, is it fully priced yet? if you're looking what we've experienced, and really that's the market that I think has got the most lens looking through at it. Maybe there's another 5%, maybe there's another, I don't know, 10%. Is it going to flatline? There's no return, as Christoph mentioned, as far as bonds. There's nothing there. Investors are looking for opportunity. I think the money will keep on pouring in, Sean. I think the young...
Regardless of PE.
Yeah. Well, I think they look at that and they look at opportunity, Sean. I think that the lifespan of a trader can be far shorter than what the historical data shows. You know, guys in there for, you know, a matter of years. Many traders are looking for, you know, short term.
I mean, one of the expectations on the what I'm getting to from a market point of view is that the price earnings is built in an expectation that profits are going to come.
Of course, it's forward looking.
And our profits going to come this year to the level that the market is forecasting? And if not, is that a sell?
Well, here comes all of the inputs that we've discussed so far as shipping costs, everything that's ramping up. So are we going to produce and are we going to have consumption? Are we going to see the similar appetite moving forward? COVID, talking before the show started, I live in a world now in Australia that the doors are open. We don't have visitors versus a lockdown in Germany. Australia it's game on over here. Everything's hunky-dory. So I think we've
Except
got to work
if you're
through...
a tennis player in the Australian Open and you're in your bedroom.
Yes, exactly right. But I think where we look, how the COVID still is the wild card. How long does that stay front and center? And I'm thinking the way it's looking as far as the European situation and America, are we still in the doldrums very much into that Northern Hemisphere summer?
So week ahead, Peter, what stands out for you that's worth taking note of? We referenced last week on the pure oil side, inventories in the US built a bit and sort of put a little downward pressure on the price.
Well, I think the oil side of it, Sean, was possibly a little bit of exhaustion to the upside, profit taking, in other words, and that has just trimmed a little bit out of it. There could be a little bit further over the next couple of days, a little bit of softness. That US dollar is still at that 90.2, 90.3 US dollar index. Certainly keep an eye on that. I want to see what's the theme over the next couple of days as far as US equities post-Biden and anything else that rattles a cage. From as far as a big picture, we've got quite a bit of economic data coming out this week. You've got America and Germany fourth quarter GDP. I want to see further as far as the tech sector, those earnings, because that really paints the picture. If you see a capitulation in the tech sector or a level off, then that profit taking may be the sign of people saying we're fully priced for the next couple of weeks.
I mean, can you have, Peter, the tech boom of 2020 was based on a lot of things, but ultimately the home economy, everybody at home, Amazon went through the roof. If the expectation is that second half of the year vaccine frees us all, then should we not start to see the tech stocks moderate a bit?
You could see, Sean, I mean, the move to the upside has been nothing short of parabolic really since, the start of April. So eventually a market does outgrow itself. And are we at that inflection point at the moment? Fully priced and the market says, hang on a second, let's just see. Though the other side, of course, is working through Christoph's wonderful graph on the left-hand side was, as far as stimulus and where we're at. Are we going to really rattle and, throw the bucket in again and have another really big leg up over the next matter of 3 months? There's the unknown. What does the Biden administration do? Yellen and so on. So I think that's where traders are looking at it. The short-term traders keeping their hands on the wheel and really conscious as far as all of the fundamentals, technicals, and what's going on with everything else thrown in there.
Thank you, guys. All the best. Have a good week. Take care.
Thank you, Sean. Thank you, Christoph.